Halftime report on CNBC TV18. For now, the market is still under quite a bit of pressure. The good part is that the selling pressure hasn't accelerated. It's still down, but not worse than what it was, say, 2 hours ago. It's still down about 280 odd points. So let's see. Let's talk about individual stocks now. There is M&M Finance that continues to be on our radar. Morgan Stanley has an overweight rating on the stock, while Jefferies maintains its underperform rating. So it's a bull versus bear situation happening here. Abhishek is here to give us more on that. Abhishek.
To begin with, stock is down about 20% in last two trading sessions, and total trade volume was around 852 crores, which is the highest in last 3 months that we are seeing, or 4 times the last highest that you saw on Friday. So there is a bull versus bear scenario wherein the bull is Morgan Stanley, who has an overweight rating on the stock with a target price of 225 per share. They have cut down on EPS forecast mainly on account of lower net interest margin and higher credit costs that they see. So RBI's ban is likely to cause FY23 provisions with reversal in the future, as and when the net impact can then be on the lower side. There is fear of moral hazard and macro volatility, which could weigh on the stock performance in the near future. We have a bear case scenario coming in from Jefferies, who have an underperformance rating with a target price of 155 per share. They say that RBI's ban could lead to 75 to 80% drop in repossession activity. Hence, this could lead to higher loan losses or loss given default or NPAs till it gets readjusted with the processes that are following up. So a 5% higher loan loss on assets could actually increase the credit cost anywhere between 10 to 15 basis points. Back to you.
Okay, all right, Abhishek, thanks very much for that. So yes, the jitters began last week for M&M Financial from the NBFC space. But Motherson is the other one which is in focus. That is because of a large acquisition in Japan, Sonia.
So it's actually from Motherson's perspective, it's a fairly small acquisition if you look at it from a value perspective, right? But why it's important is because it's the first acquisition that Motherson has made in Japan. So the company will acquire the mirror business of Ichiko Industries in Japan, and this is for a sum of 5.2 billion yen. Now the intention is to buy the automotive mirror business of Japan and get into that market, Japan, China, Thailand, Malaysia. Now, Ichiko Industries is one of the leading manufacturers of automotive mirrors in Japan. It caters to a lot of the OEMs over there. It has 3 manufacturing plants across Japan and China. And if you look at the sales figures, right, it is an EBITDA positive acquisition. The sales have although been under a bit of pressure. So in FY19, the sales were 22 billion yen. It's gone down to 15.8 billion yen by FY21. Although it is EBITDA positive, in FY21, 1.3 billion yen was the EBITDA of Ichiko Industries. Now, Japan is actually the 3rd largest automotive manufacturing hub in the world. And hence, Samvardhana Motherson is getting an entry into that space, which is a positive. This is also the 3rd acquisition from the Motherson stable. This is during the current 5-year plan, following its acquisitions in both Turkey and China. So in that sense, it's positive. But yes, it's a fairly small acquisition.
Small acquisition, but strategically important for Motherson. Samvardhana Motherson, that is. The stock, of course, on account of the weakness that we're seeing in the markets, down about 4% despite the acquisition announcement. But one of the stocks which is underperforming for the last few trading sessions is Power Grid. It's among the top F&O losers for the 2nd session running. Remember, on Friday itself, it was down by almost 8 odd percent, currently sitting at the cut of closer to 6%. Vivek joins in to tell us what's the reason behind the fall and what's spooking the street. Vivek.
Well, that's right. For the 2nd straight session, it's one among the top laggards as far as the entire market is concerned. So now, the other thing to keep an eye out for, even the volumes as well as the delivery on Friday was quite high. So the main reason for this particular development and the sell-off that we are seeing in Power Grid is the fact that there are a few news reports that actually say that the Power Ministry is in talks with Power Grid for Power Grid to go ahead and purchase Power Finance Corporation's 52.6% stake as far as REC is concerned. Now, this particular development, it's by other media sources and other media agencies. So far, the Power Minister, Power Grid, REC and PFC, neither of them have confirmed or even commented on this particular development. But on the back of this particular development, there have been brokerages that have gone ahead and done a scenario analysis on how exactly this could impact Power Grid. The first thing that they say is that, so far, Power Grid has not been forced by the ministry, or Power Grid has not been asked by the ministry to go ahead and make any other investments in other companies. Also, what they're saying is that, when you're talking about other PSUs, they have made investments outside the ministry directives, but Power Grid has remained relatively insulated. A dividend yield, according to Jefferies, they believe dividends could be much lower at 4% versus 6%, and they believe that this particular development could act as a significant sentiment dampener as far as the near term is concerned, and could lead to a significant valuation derating, which is what we are seeing as far as the markets are concerned.
Okay, all right, Vivek. Thanks very much for that. That's on Power Grid. That stock has lost around 17% or thereabout on a month-to-date basis. Time for a break now, but up next we'll be talking technicals on the other side. Stay tuned.